Stocks rose today, and it was a very impressive showing in terms of a market forecast technical indicator perspective, because we did see all four of our U.S. equity indices go back to a bullish posture. The Dow Jones actually looks the strongest from a charting perspective, but today's winner was the NASDAQ, of course, today being the big Apple event, so that kind of spurred along a few more of those tech names to the upside. So we'll talk about all of that, then we'll get into our trade application, where I wanted to focus on a chart that's been trending sideways for the last 2.5 months, but finally got signs of a breakout here today. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 15th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go over to our description area and sign up for our email distribution list, so that way you can be notified whenever we post these videos. You'll also be made aware of the various stocks that are giving you overbought and oversold cluster signals. If you scroll to the bottom of those emails, those would be all the stocks within the S&P 500 giving you those signals. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZ. I would encourage you to follow me if you're not doing so already, and also appreciate those of you that click like and retweet on these market outlook related tweets. Helps us send this message out to a much wider audience than we're able to on our own, so thank you for that. And then lastly, we have a presence on Facebook as well. Feel free to go over to the web address that you see embedded in the logo in front of you to join our group on Facebook. All right, let's go ahead and jump into the action here today. And as you can see, I've got chart 4B pulled up here in front of us for those of you that are premium members of Market Scholars that want to follow along at home. And as you can see, the S&P 500 was up 0.52% today, so about 0.5% there. Pretty decent day, all things considered. The Dow Jones barely got its head above the zero line. It was up 0.01%. And the NASDAQ Composite was our leader, as I mentioned earlier, up over 1% today, 1.21%. A lot of those technology stocks doing well in the face of the Apple event, where they announced some upgrades to their iPads and iWatches, or Apple Watches, I should say. However, it sounds like the phone might not be available until perhaps next month. So we'll keep our eye on that story. But of course, everything in the Apple and Apple ecosystem tend to drive technology stocks, and it's an important one to keep your eyes on right now. Looks like the NASDAQ is benefiting from the news that we did here. And then the Russell 2000 was up, but similar to the Dow, just barely. It was up 0.08%. Now, you heard me mention in the intro that the Dow Jones Industrial Average chart actually might be the one that looks the most impressive. And the reason I said that was because you can see that we have not only a bullish posture, it's strongly bullish. So notice the shading of the background color of the chart right here on the Dow Jones in the upper right. Compare that shaded or that color of shading for green to the color of shading of green over here on the S&P 500, where it's a lighter color of green. Now remember, the difference between those two is whether we would consider them to have either a weakly bullish posture or a strongly bullish posture. With the S&P 500, according to the market forecast, remember this is not David and I saying this, these are the rules of the technical indicator itself. According to that technical indicator, we have a weakly bullish posture, and the reason for that is this green intermediate line has reversed back higher. I know it's hard to see with the naked eye, and that's what makes these charts as valuable as they are, is it allows you to kind of determine that using a color system as opposed to trying to squint and see, is that line up, down, or sideways? Right now, to the naked eye, it kind of looks sideways, but we can see right here in the label that the intermediate line is now at 40.87 and rising. And when it's rising between 20 and 80, that is a bullish posture. Now, it only becomes a strongly bullish posture if the number is above the 50th percentile of the chart. And right now it's not. It's at 40th percentile. So if it continues to rise in the coming sessions, we could very easily go back to a strongly bullish posture. Right now, it's weakly bullish. You can also see that the moving average line is still yellow. And in this case, what that signifies is that price is below a rising 30-day moving average on the S&P 500. But again, back to the Dow Jones Industrial Average, that's why this chart looks so interesting, is that not only do we have the strongly bullish intermediate posture as opposed to the weakly bullish intermediate posture on the S&P 500, but we also, here on the Dow, have a green moving average as opposed to that yellow moving average on the S&P 500. And the reason for the green moving average is price is above a rising moving average. So that could easily switch tomorrow on the S&P 500. In fact, if we're up even just a little bit, I would assume that that is going to happen because it effectively closed right on the moving average here, it looks like to me, on the S&P 500. But it is a very tiny way to kind of decipher, amongst all these charts, which ones are stronger, which ones are weaker. And right now, the Dow doesn't get a whole lot of press, but right now it kind of looks like it's the strongest of these charts in front of us because the NASDAQ is similar to the S&P 500 in that it has a weakly bullish posture. It's not strongly bullish, with that light green background color there. And then we also have a yellow moving average similar to the S&P 500, and the same thing can be said for the Russell 2000. Now note that the Russell 2000 is a bit different than the other three charts because it actually gave us our weekly bullish posture yesterday. So this is now the second day having that bullish posture, but that posture is still considered weekly bullish because again, you can see down below here with this green line, yes, it's curling back higher, but it's still below 50. It's at 41 right now. So the Dow Jones is the only one where the green line on the market forecast is above 50. It's at 57 and rising. So that appears to be the strongest trend trading chart on the board right now. And remember, there's been a lot of shakeup in the Dow here recently, where it added stocks like Amgen here and Salesforce and Honeywell recently, and it also started to reduce its exposure to Apple through no fault of its own. You remember, Apple just did a stock split. Speaking of stock splits, I don't know if you guys have been watching Tesla since my trade application example in Thursday's video where it was a bullish trade idea. That stock has been off to the races, to the upside since then. So that trade is doing really well right out of the gate. Like to see that. But both Tesla and Apple were somewhat notorious for announcing their stock splits here in the last month or so. And when a stock splits, its share price comes down. You as the shareholder receive more shares in your account, but the share price itself gets reduced. So with Dow Jones Industrial Average being a price-weighted index, when Apple's share price goes down dramatically, it becomes less influential within the Dow. Now, some of you on Twitter that follow me might have noticed that, I think it was either last night or this morning, mentioned that some other stocks were getting into the act in terms of stock splits. In fact, Trex, a company that we own in our Monday top-down trend trading class, it had a stock split today, 2-for-1. So some of you that own Trex might have noticed that you now have double the amount of shares in your portfolio as you once did, and the share price has now been lopped in half. And then also NextEra Energy, a utility company, is getting into the act and has announced its own 4-for-1 stock split. So we're starting to see a little bit more of that type of behavior as companies have kind of looked around at Tesla and Apple and seen the success that they've had ever since announcing their own splits. I suppose others are trying to get in on the act. So I wouldn't be surprised if we see a bit more of that trend going into year end where companies are announcing their stock splits. Also, while we're talking about the NASDAQ here, before I forget, tomorrow might be a very big day for tech stocks as well. Remember that the company Snowflake is going to be releasing into the secondary market. They've just completed their IPO. And so a lot of people feel like this could be the biggest software IPO of all time. It's going to be trading under the ticker symbol SNOW, nice and easy to remember, or snow. And there's been some interesting developments with not only Mark Benioff's Salesforce.com being an early investor, but also Berkshire Hathaway. Now, obviously, Warren Buffett would not consider cloud architecture in his circle of competence. So it is highly likely that is Ted or Todd, one of his other investment professionals or portfolio managers over at Berkshire, that's likely kind of pushing Berkshire's interest in Snowflake. But nonetheless, the fact that you have kind of that seal of approval from Berkshire Hathaway makes that particular IPO a little bit more interesting for some folks as well. So that has the potential to cause a lot of excitement, especially on the NASDAQ here tomorrow. So keep your eyes open on that one as well. All right, let's take a look at another chart. And this time we're going to pop on over here to the 3 green arrows chart. And this will be chart 4D. And as you can see, we did have one thing to report that is new from yesterday. And that thing to report is down below here in the lower right-hand corner. Russell 2000 did get a green arrow back on the stochastic. So it no longer has 3 red arrows. It has now transitioned to a white background from yesterday being pink background. And again, the reason for that is yesterday we would have had a red arrow on the stochastic, but today the Russell 2000 was up enough in recent sessions to give you a green arrow on the stochastic. We still have a red arrow on the MACD, and we still have a red arrow on the moving average, but good positive sign there. Remember that it kind of joins the Dow Jones, which already had a mix of green and red arrows after yesterday's session when the Dow closed above its moving average. However, on the other two, it looks like we're kind of in this 3 red arrows situation, at least with the NASDAQ. The S&P 500 is so close, it's basically sitting right on the moving average, that I think the system's a little bit confused there, where it's showing that there is a green arrow, but it's actually right on the moving average. So we'll figure that out. We'll sort that out tomorrow, whether it's up a couple pennies or down a couple pennies. We'll determine which direction that's going to fall in terms of the 3 green arrows system. Let's go ahead and take a look now at our 1040 crossover method. And this, remember, is our longest look back chart. All these charts here on chart 4C are 3-year charts. Each one of the candles is 1 week in length. Now you'll notice that we have green backgrounds here currently over all 4 of our charts, signifying that we do have a bullish 1040 crossover that is in place. Some of you might refer to that as a golden cross. And really what you're trying to do is just get the general sense of what is trend telling you. And when the shorter term moving average, it has risen up and over the longer term moving average, it's generally a bullish condition. And so that's where we stand with all 4 of our charts right now. Now, there has been a couple of little arrows that have been showing up on this particular chart that you're going to want to be aware of, and that occurred on both the NASDAQ and the Russell 2000. You'll notice that last week on the NASDAQ and the Russell 2000, we got these little red arrows to show up, where price closed below the orange line. In that case, that was price closing below the 10-week moving average. But as of this exact moment in time, we're getting the green arrows right back on both of them as well. So price this week has risen right back above them. So those are just meant to be warning signs more than anything else. Remember that the driver of this particular chart is the background color and whether we have the moving averages crossing each other over. But obviously the price action eventually has to cross before the moving averages do. And so by looking at the price action, it can sometimes give you a little bit of a warning signal. So we'll see how that closes. Remember, it's only Tuesday, and these are weekly candles we're looking at here. So those green arrows are good to see so far on a Tuesday, but they're no guarantee that they will exist come Friday afternoon. So we'll keep our eye on that. If anything major changes, we'll let you know. Let's go ahead and pop on over here to the internet briefly and see if this will be a 15-minute version video tonight or a 30-minute version. And it looks like it's going to be a full-length 30-minute version, as more than 100 of you did click like for me the last time around. Again, really happy to see how that bullish Tesla trade is working out for this class portfolio right now, as that stock has been bouncing very, very strongly the last few sessions. But with over 100 of you, 121 to be exact, clicking like, we'll go ahead and continue on with this video here tonight for an additional 15 minutes. So thank you to all of you that take that 5 seconds out of your day to click like and retweet there for us. Remember, that's David and I's easiest way to get the information out about Market Scholars to a wider audience than we can do on our own. So we do really appreciate those of you that take the time to do that. Remember, if you'd prefer the 15-minute video from me on Thursday, then don't click like. If it's less than 100 likes, I'll just do the abbreviated 15-minute version. For those of you that like the 30-minute version or the full-length video, then if you can click like and we get them up over 100, I'll plan to do that again on Thursday. By the way, David was having some technical difficulties by the sounds of it with his computer here late last night and was not able to get the Market Outlook video done. He had recorded it, it's just that his computer basically fried the file. So anyway, if you're looking for that and you can't find it, that's the reason behind it. But as far as I know, he should be back with you tomorrow. In fact, he's got a pretty big thing coming up here tonight. I've been tweeting about this earlier today, so I'll just kind of show you while I'm over on the internet. David Keller, who's over at Stock Charts TV, is going to be interviewing David Settle. So the battle of the two David CMTs here tonight, and it sounds like that's going to be at 6 p.m. Eastern Time. I'm not all that familiar with that particular channel, but I would have to assume that there's probably going to be a recording available of that as well. So if you're following either David or myself on Twitter, we'll make sure we retweet that, so that way you guys can check out that interview as well. Also, while we're over on the internet, real quick here to show you what's been going on with the sector selector. We didn't have a whole lot of change at the bottom of the rankings, but we did have one reasonably big change up at the top, and that was the industrials did kind of fall out of favor. We actually looked at the industrials as a sector today in my dividend growth investing class. That file has not been sent back to me by WebEx yet, but I'm sure it will be by the end of the day. So for those of you that missed that and you're premium members of Market Scholars, make sure you check that out, because today was a very rare situation where one of the two companies that I selected for that dividend class in the industrials sector, I had never reviewed before, not in any of my dividend classes. Nobody's even asked me about it in a question and answer session. That's incredibly rare, as I've been teaching these dividend classes for 6 years at this point. So to have a brand new company out of the blue show up on my lap was very interesting. So if you're curious about that particular stock and the one that we reviewed it against within the industrials area, be sure to check out that recording when it becomes available on our calendar later on tonight. But industrials did fall out of favor just a little bit. They fell from number 2 to number 4 week over week, so that created a little bit of an opportunity for other sectors to move higher, and those other sectors were discretionary and communications. Each were able to go up one notch there and join materials up at the top. All right, let's get back on track with some more charts over on Thinkorswim now, and let's do some 12 grid analysis. Coming on over here now to chart 5A, and this will be the asset class 12 grid. Now a reminder that when we look at these 12 grids, the background colors of the charts will determine whether we have a bullish or bearish posture at this moment in time, according to the intermediate line on the market forecast technical indicator. So as you can see down below here, we've got a few pink charts on the bottom rung. We've got the US dollar as a pink chart. We've got oil as a pink chart, and we've got the 10-year US Treasury yield as a pink chart. Now, the 10-year Treasury yield is actually trading above a rising moving average, so I wouldn't really get overly concerned about the bearish posture there yet. Oil is obviously much more concerning, because you can see that we have that deeper shade of pink, signifying that we not only have just a bearish posture, but we have a strongly bearish posture. And that should be fairly self-evident, because you can see that this particular chart, in this case it's USO, has completely fallen off of the map here. Now, we could also try to take a peek here at /CL, for those of you that would rather look at the the futures contracts themselves. The reason I don't use that as my default mode is because the futures symbol changes all the time. You don't see it here with the CL, but there's a few other digits that come after that. And I like to have these little labels show up. So when we use USO, it'll always say oil right there. But if I used CL, because it keeps on switching to new monthly contracts, the ThinkScript code within there can't really keep up. So anyway, point is, both charts look pretty similar to one another, but a barrel of oil these days is going for about $38. This is crude oil here, and you can see that it was actually up nicely today. That was a pretty solid looking candle right there. So there is that potential for a quick little reversion to the mean type of a move here after having sold off so aggressively those 4 candles in a row right there. Today was a solid response to that sell-off, but it's got a lot of work to do. You know, at this point, you can see that this moving average, in this case is the 30-day moving average, is clearly pointing lower. So if you were fortunate enough to see oil pop all the way up to that moving average, the fear becomes that it starts using it as a resistance area. Notice back here where it touched the moving average, bounced off of it to the upside, touched the moving average here, bounced off of it to the upside, touched the moving average here, bounced to the upside. So we make the assumption that when price is above the 30-day moving average, it will use that 30-day moving average as a support bounce area. When price then goes below the moving average and it goes up to touch it from the underside, we assume that it's going to be a resistance area. Now, will that always be the case? Of course not, but you have to kind of set up your trades with a set of assumptions and then react if those assumptions are proven incorrect eventually. But right now, that is the assumption, is that, yes, we're getting a nice little bounce of 3% out of oil today, but that doesn't change that the trend has been wrecked here within the last couple of weeks. Gold has been a little bit better than oil. You can see that gold has been holding up, and you guys will recall that, you know, a couple weeks ago when I did the video on that candle right there, I was saying this is a make or break candle here because we're basically sitting right at horizontal support. We had a touch point right there, had another touch point there, had a touch point there, and right there, and it was also kind of a gap fill back over here. So gold has been doing a good job of keeping traders interested. It doesn't mean that we're home free yet. It doesn't mean that we're off to the races yet. It just means that the buyers have been more stubborn than the sellers, and they haven't forced the issue to the downside quite yet. But you can see that the moving average remains red on the chart of GLD. And by the way, if you ever wanted to look at the futures contracts for gold, it would be /GC. And an ounce of gold these days is going for about $1,962. And you can see right here that we still are dealing with that red moving average. In other words, price is just a little bit below a falling moving average. And so it is possible that some resistance can come in right at this area that we find ourselves right now. But if that does not take place and the bulls push gold up and over that moving average, then all of a sudden you got my attention again. We might all of a sudden start put some bullish gold trades on once again. But right now I want to play it in the wait and see mode because we're kind of just stuck between an area of strong horizontal support and an area of some resistance up at that moving average. So kind of in no man's land right now until we see further evidence. In terms of other charts, you can see that here on the upside, we saw emerging market stocks have the biggest move from the different areas around the globe here today. EEM was up 1.05%. We now have a upward trending moving average again, which remember that was called into question about a week ago. So good to see that nice solid 3-day bounce out of EEM there. Remember, EEM has been our leader here recently. You can see this little number kind of in the black label to the right of the chart says that EEM has been up about 15% over the last 3 months. Now we compare that to United States here with SPY, and it's only up about 11%, and the foreign developed markets like Europe and Australia, Japan is only up 8%. So it is those emerging markets stocks, you know, your Chinas, your Brazils, Russias, Indias, those are the areas that have seen a little bit more interest from traders here recently. So we do have strongly bullish postures on EFA and EEM. We have a weekly bullish posture there on SPY. All right, let's take a look at another 12 grid here. In this case, we'll go over to the U.S. sectors. And remember that this particular view of the U.S. sectors, this chart 5C, is going to be the market cap weighted version of it. For those of you that are premium members, if you wanted the equal weight version of the sectors, remember that you can come down to right here, 5R is the chart that you would use for that. So in this case, where we're using the market cap weighted version, you can see that we had some decent winners here today. The communications area really stood out. So that's your kind of your Facebooks and your Alphabets, those types of companies doing reasonably well. Maybe even your Netflixes and Disneys and those types of companies. So communications had a big day, and it's an important day because not only was it up the most from a sector perspective on a percentage basis, but from a charting perspective, you can see the candle got us up and over that rising moving average. So notice that the moving average yesterday had a yellow tip. Today it went back to a green tip. That's a strong sign of stabilization right there. So I'll be curious to see if we can get a little bit of a bounce up and off for the communications going forward. Remember, we did something similar at the end of June back here where we spent a couple days below that moving average, making it go yellow for a couple days, and then boom, off to the upside once again. So we'll keep our eye on communications. And also, we saw a big move out of real estate today. Real estate was up 1.32%, making it the second best performer today. Some of you might have seen me joking on Twitter that Kanye West had some random tweet that said, buy land, and then he had another one that said buy property, and so I quote retweeted him saying buy REITs. Make it easy on yourself, right? And REITs do tend to benefit when real estate is in fashion. So right now we saw a nice little benefit there out of the REITs today, up 1.32%, and you can see that that's been a pretty solid 1-2 punch there both yesterday and today. You know, just late last week, we were trading below a falling moving average. And then just 2 sessions here this week, Monday and Tuesday, we're firmly above that rising moving average. And we're basically sitting at 3-month highs. So some really productive charting behavior there out of a lot of those REITs. Doesn't really help my trades, my bearish REIT trades that I had done in this video on the office REIT and the cell tower REIT. But then again, my other bullish trades like Tesla are making up for that. So anyway, you're going to win a few and you're going to lose a few. Utilities also were kind of an interesting area here today. You can see that utilities were up 0.67% and are now back above their moving average as well. Now, unlike the REITs, which have a green moving average, utilities still have that yellow moving average right there. So it's signifying that, yes, price is back up above it, and that was a very strong day there. In fact, 3 up days in a row for utilities, but because utilities had been under a little bit more pressure in the prior sessions before that 3-day rally, the moving average is still trending a little bit lower there. But nonetheless, good to see utilities stabilizing at around those levels as well. And also wanted to point out that materials, remember materials were number 1 for the last 2 weeks on my sector selector rankings. Materials hit a new multi-month high here today. They're up 19% in just the last 3 months. And that is actually the best on the board, right? The discretionary second best, they're up 17%, but discretionary has pulled back pretty significantly over the last week and a half, whereas materials have actually gone up over that exact same time period. So a lot of interesting price action there in materials. And yesterday in my top-down trend trading class, the class selected a materials company to be our most recent entrant to our portfolio. So if you're curious about that, that class recording is already posted to our Trading Rooms calendar on our website for those of you that are premium and plus members. All right, so with that information out of the way, let's get into our trade application example. And it's a segue from our conversation about utilities closing above their moving average here today. So I'm going to come over here to chart 3A. And remember, I've already sent out this information. I actually did today's trade quite early, about an hour and a half before the market closed. So all of you that are premium members, remember, if you're signed up for our Telegram trade alerts, you would have received notification about it already. But let's catch everybody else up to speed here on the free YouTube video version of this as well. So this is a kind of a speculative stock within the utility space. So a little bit of a strange combination there because, of course, most people tend to think of utilities themselves as not speculative, as being one of the only near monopoly types of sectors that's out there. But there are certainly some stocks within the utilities sector that are considered a bit more speculative, and this is one of them. This is a stock that those of you out in California probably are grumbling some negative commentary under your breath right now at, because from what I understand, it is not a loved company out in California. This is PCG. PG&E Corp. It's a company that's actually been around for a really long time. I was watching, or I was looking at some data on Twitter of some stock trading activity 100 years ago, and this stock was trading 100 years ago, to give you an idea of its pedigree. However, with all of the California wildfires that have taken place in recent years, it had to go into some bankruptcy proceedings. It has now emerged out of those bankruptcy proceedings. Those that retained the equity never did get completely wiped out to zero, like does happen in some bankruptcy proceedings. So these equity shareholders, I suppose you could say, lucked out from that perspective. But I believe they emerged from their bankruptcy proceedings back here in kind of like the June time period. It might have even been this candle right here. Notice that we had this big volume candle at the end of June. So it might have been right around that time period. And ever since kind of being back on the publicly traded markets free and clear, this stock has mostly just gone sideways. It hasn't done anything at all. This is a little $9 or $10 company here. And so you would have thought that it probably had a little bit more aggressive movement, either up or down, but really it's been as flat as a pancake, as you can see here. The last 2 days have kind of changed that. You can see that just 3 days ago, it was trading below its falling moving average. Then yesterday, it had this really nice looking candle, and it put us right back up to this prior resistance area here from August 13th. And so somebody might have been a little bit jumping the gun if they were buying it on yesterday's close. But today gave us additional information, and the stock went up again. Now, at its high of the day, it was up quite a bit. I think it was up like 3% or something like that. But by the end of the day, it did sell off a little bit, and it closed up about 1.45%. But that was still important enough because today's close on PCG takes us all the way back to the intraday price action of this candle on the 26th of June, which was that big volume candle right there. So, you could maybe make the assumption that those that wanted to get out and sell their shares have done so already, and now we're kind of setting up for kind of a new level going forward. So what I did in this particular case is just a simple swing trade with the stock. So this was not an options trade, where I bought 100 shares of the stock, and then I immediately put a one cancels other order on it. And I did a typical kind of 1-for-1 reward risk relationship there, where I'm risking just as much to the downside, where I put my stop loss 1 penny below the low over here. So my stop loss is at 8.34, and tacking that back onto the entry price brings our upside price target up here to this level, which is 11.26. And you can see that that is 1 penny below the high of this candle off to the left-hand side here on June 16th. So in other words, if I'm going to be proven wrong on this trade, which could very well be the case, remember, we're not going to win all of these. So if I'm going to be wrong, I'm going to be wrong when we breach this prior low and we hit new multi-month lows. At that point, don't want anything to do with the trade anymore, and I want out, which is why I have my stop loss down there. On the other hand, if these last 2 days are a sign of things to come to the upside for either utilities in general or PCG specifically, then at least we don't require a breakout above the highs of this candle over here. We just need to go up to those highs. And if it can do that, even if there's a big seller sitting there at 11.27, we're out at 11.26. So we'll see how that goes. One of those rare stock-based swing trades here on the recognition of a sideways breakout pattern that has taken place here. And I should also add that yesterday's candle came in above average volume. Remember, on this particular chart, if you get those little black arrows in the volume down below, that means that it was 1.5 times the average volume. So yesterday was a big volume volume day. Didn't quite get as much volume today, but was right up in that similar neck of the woods. And we did close at the highest level for this particular stock since going all the way back to June. So that's our trade application example for tonight. Thanks for joining me here. If you got value out of tonight's video, remember to go over to click like for us there on Twitter, especially if you want me to do the full-length version of the video once again when I'm with you on Thursday. And remember to check out David's appearance on Stock Charts TV here tonight as well. And he should be back in the saddle for you here on the Market Outlook video tomorrow night. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.